In this recording, we're going to find out how to solve for the payment when we have an ordinary annuity. So what the company wants is to accumulate $3 million at the end of 10 years. The interest rate that they can obtain is 5%. The first payment is going to come at the end of the year, and the last payment will occur on the same date that we want the $3 million to be accumulated. In order to solve this problem, we click on the payment formula in Excel. The given interest rate is 5%. The number of periods is 10. The present value is 0 because at this point we haven't deposited any money. There's no official amount at the beginning, so it's worth nothing. The future value we expect to be $3 million. The type I leave blank because this is an ordinary annuity, or I could put in the number 0. I'm going to click OK, and the payment amount is $238,513.72. And so if we make this payment at the end of each year for the next 10 years, we will accumulate $3 million at the end of 10 years.